Hey everyone, it's me, CNP, and today we're back with another ASMR video. I have no idea where the time went. It is almost the end of September, and I just realized that I have not done a portfolio update for you guys for the month of September, which is unlike me. I usually like chomping at the bits to make these videos because I like sharing this information with you guys, and it's quite frankly, it's something different that not a lot of people do. So I like to think of myself as, one of the only ones out there that's talking about stocks in their ASMR videos, but definitely not the first. I'm not claiming to be the first. I'm not claiming to be the only, but I don't see, outside of like a couple other channels, very many stock videos. So and on top of that, I have made a pretty major move. We completely sold out of one of our second tier holdings and replaced it with a new, pretty much like tier 1 holding. So I will definitely be sharing that information with you guys. But before we get into all of that, I want to say, if you're not currently subscribed, please hit that subscribe button. We're on our way to 25k subscribers, and a subscription would definitely help. It is completely free. It's free to set up an account, free to subscribe. So hit that subscribe button and enjoy this video. Alright, here we have my Robinhood portfolio, and as you can see, I am about $4,000 more well off than I was last installment of this series, which was around August 20th, so almost a month ago, a little bit over a month ago. We have gained quite a bit, and I will show you that now. Look at that, 11% in the last month, $2,679. I've actually been adding out of my own pocket again with, I'm fortunate enough to have some extra cash laying around, as well as you guys have been supporting so much on YouTube that a portion of my ad revenue goes into this portfolio. So that is really cool. I thank you guys for that. So two major things I want to talk about in this video. One, as you can see over here, we do not have Cisco anymore, and we actually have Apple now. So Cisco was a stock that we held for quite a long time, but we got rid of it. We sold it at around $42 a share, and honestly, this stock was a disappointment. I was waiting for it to just, I wasn't expecting it to explode, like any of our other holdings, but definitely wasn't expecting it to lose out like it did. I mean, look at this. That was a big drop. We took a big L here, down 13% in the last 3 months, and truth be told, our stock price, our average was about at this level, $47 level. So we sold, I believe, at 42. The history is down below, but I don't want to scroll down because this little screen here that you see on your screen is exactly what I want you guys to see. Yeah, so it's at $39 a share. Honestly, I kind of want to jump back into it just because I still like it as a dividend stock, but it's still just falling, and I just felt like I could put my money somewhere better, and unfortunately I put it in Apple after the split, which has been on a pretty big dive itself. So I took it out of one thing, put it into another, and pretty much got the same result, was falling stock price. As you can see, though, we have got quite a bit of equity now in Apple, which I am okay with. I'm absolutely okay with. We actually, so one thing about Robinhood is if you have Robinhood Gold, they actually allow you to buy up to $1,000 on a credit line. It's called, I think it's, yeah, it's like a margin, Robinhood Gold margin, and they actually give you $1,000 interest free. So it's something that you can activate. You can activate or deactivate. I activated it and bought $1,000 of Apple, as well as the 2,000 that we had in Cisco. I think it was like 2,200 that we had in Cisco. So, and then I also bought a little bit of my own. I have a weekly deposit of $100 that goes into this account. I bought for a couple of weeks, so that's where you get this $3,800 of cost. Price average of $126. I definitely would recommend that you take advantage of this dip. It's not going to stay at these levels for very long. I mean, Apple is Apple. Apple is going to rule the world, as if it doesn't rule the world already, along with Amazon and Google. But I fully expect it to be at new all-time highs by, I don't know, the end of the year, maybe, hopefully, we'll see. But this is Apple post-split, so they actually, I think it was a 3-to-1 split, or 4-to-1 split, maybe it was just a 1-to-1 split, I can't remember. I want to say it's a 4-to-1 split that they did, where, for every stock you owned before the split, you now own 4 stocks after the split. And many were speculating that after that happened, it would really rip up and have like a huge gain day. And unfortunately, it did not. It went the other way. But I'm completely comfortable with this unrealized loss of 12.5%, which you can't see, 12.5%. Unrealized loss. I'm okay with that right now. As a matter of fact, I welcome it because I can buy more, get that average down, so that when it does eventually climb, which I don't see it not doing, we will make even more money. But what I really want to show you guys is my beloved. If you guys have been keeping up with this video series for a long time, you know that I absolutely love Roku, and as I scroll down you will see why. Look at this bad boy right here. Total return 31%, and truth be told, that is understated because this average cost is very much overstated. My true average cost is probably closer to like $110, $100, so this should really be way higher. But as you can see, we had an absolutely explosive week out of the weekend. Monday rolled around. The big news Monday was that Peacock, yes, Peacock, NBC's version of Netflix, was coming to Roku. They were holding out. They didn't want to, join the Roku family. They wanted to try and do things on their own, and NBC caved and offered their services to Roku. And so now, if you have a Roku, you can download Peacock on your Roku TV and enjoy Peacock on that device, which is mutually beneficial for both, both Roku and NBC. So really good to see that. Also, to my knowledge, HBO Max is still not on Roku, or HBO. I think HBO Go is, but HBO Max isn't. So if I'm remembering correctly, that's how. I'm not sure. Don't quote me on that. But there should be another announcement coming where, they get more channels. There's going to be more, streaming services that come out that Roku can add, and that just means more dollars in their pocket, more ad revenue in their pocket. I really, really think Roku is going to break that $200 mark here soon. Look at that, 3 months, 51%. And I've been holding these 60 shares for the entire time. Sometimes it was more than that, honestly. So, big W here with Roku. And then another thing I want to share with you guys is Stitch Fix here, man. And I would be a little bit more bummed out about this if it wasn't for the put option that you may have seen here. We bought a $28. This was right before close today, Tuesday, tonight. I bought it right at about 3:59 p.m., so right before close. We bought a $28 put option, which I'm not 100% experienced with option trading, but I'm pretty sure that this is going to be a big, big gainer for me tomorrow. As soon as the market opens, this contract should get repriced at, I'm hoping, anywhere over $2 a contract. I don't know. This is the first time I've really dabbled in contracts, but I would guess that it would probably double in price overnight. So it's a $28 put, and the stock price right now is at $26.60, down 15% after hours. At times it was 16. Yeah, this is looking real nice for that put option. Granted, I do have 50 shares, so unfortunately I lost $123 today, just today, 8% that I lost, because fortunately it was up 8% during the day, and then it fell 15.5% almost. So you take that, you get that 8%, which you cannot see, 8%, $8.47, or 8.47%, sorry. So hopefully we'll make that back in the form of our put option that we will probably sell at the beginning of the day tomorrow. So can't count the chickens before they hatch, but I think this is a big dub. This should be a big W for my first ever big options win, unless I'm just missing something. But we still have all the other usual suspects. We have Trade Desk, TTD. It's at 468. It's not quite at its all-time high of 515, but as you can see, boom, still really at, I never let it go, never sold, never bought back. So almost 200% return there on Trade Desk. We got Disney, still holding strong, 20 shares, 114 average cost, just under 115 really, 10% total return already, and we're just getting started with Disney. We're just getting started. I see that definitely being a big winner for me. That dollar cost average is nice. Delta, unfortunately, Delta and SkyWest both had some big losses over the weekend. Apparently there was some news, there was a little bit of scare tactics going on in the media with, I'm not going to say the virus, but some bad news, I guess, some more shutdowns potentially, but not here, but in the UK. So that, affected the markets. Really everything looked about like this, but especially travel. We still have Blackberry. Blackberry wasn't affected. Wow, it's actually almost back to $5 again, and that's nice. That's nice. Still holding offers Edge Cloud Platform, Edge Software Development Kit, SDK, content delivery and image optimization, video and streaming, cloud security, load balancing, and managed CDN. So, anything with cloud computing and edge computing, I'm a fan of. My boss seems to be very much into Fastly, so I believe his thought process, and I'm definitely a believer in him. When he says a company is a good company, I'm all for that. I'm all about it. So again, daily up 1.67. Unfortunately, we are down after hours, but I'm really excited to see how this option goes. And then weekly only up 3.51%, but that is really good given the circumstances of the overall market in the last week. It's been kind of a bloodbath, and we're green in the weekly. I mean, that is a solid portfolio. Monthly up 11.62%. 3 months up 20.88%. And for the first time ever, I'm ready to show you guys my yearly chart. We are up 24.91% in the last year. Granted, it's probably going to go down here in the next, month or two, unless we absolutely kill it. This trend, this upward trend continues, but I'd really like to see how much we're up from March in the last 6 months. I wish there was a 6-month chart that I could look at, because boy, it would be nasty. I feel like it's almost 100%. Yeah, look at that, almost 100% since March. So take 14,000, double it, you'd have 28,000, almost 29,000. And we're currently at 26,262. So that looks like 90% returns in the last 6 months. I'll take it. I will take that. I'm not quite ready to show you my all-time chart, but definitely proud of what's happened here with this 1 year, this yearly trend. And before I show you what's been going on over on Acorns, I did want to share. Man, Tesla. Wow. Matter of fact, this is the first time seeing the after hours action. I feel like I'm gonna make a play on Tesla if it falls below 400. It was wanting to this morning a little bit, and I don't know, under 400, it'd be hard for me not to buy Elon Musk. The more that man, lives his life, the more I start to believe in him. He's definitely a crazy kind of guy, but he is an innovator, and oh my goodness, what I would give to have bought a year ago, just a year ago. This is crazy. Even 5 years ago. Well, honestly, who would have thought? Who would have thought? Not me. Congrats to Tesla longs that bought, last year. Certainly not me. Certainly not me. What else do we have? Is there anything else? Look at WWE. It's still lower than what we sold it at, 4 or 5 months ago. We sold it at like $42, so that was dead money. Good sell there. What else do we have? Cisco, again, 39. We sold it at 42, so that was a good sell. But that was, again, this is the first update you've seen that does not have Cisco. So, what else? What else? Coke. I don't know if anybody out there knows anything about Coca-Cola, but they are, me being an Atlanta guy, a Georgia boy, definitely got my eyes on Coke. I feel like I should make a play with them. They seem like they would be a very safe bet to have. It's just a nice holding to kind of make my portfolio a little bit more safer, a little bit more balanced. Kind of get Let's see, what's their dividend yield? Yeah, 3.21. Nice dividend stock. I don't think I have any dividend stocks outside of Apple and Disney. Let's see, Apple's is 0.74. Disney's, well, Delta and SkyWest are both the dividend stocks, but they're not paying any dividends until they can get out of debt. Definitely not. Definitely not. But what else we got? Yeah. I mean, here's my watch list. You can pause at any time and see anything that's on my watch list. Oh, Rocket Mortgage. I feel like this is a solid buy right here. I don't know much about the company, but anything that makes house buying and mortgages more simple, I'm all for it. It seems like, Rocket Mortgage has been around for a long time, longer than I thought, or Rocket companies rather. You know those commercials where it's like, you see the commercial at the end, it goes, Rocket, which is funny because it's actually like a whisper. He's going like, Rocket. That's Rocket companies, I'm pretty sure. And they specialize in personal financial transactions, which I'm all for. This seems like it should be a buy. If not now, then very soon. Below 20, I would want a little bit of stake in the game below 20. But what else? Nikola is another one that I added. Had a really nice rebound today. It had a big drop off of that $34 price. They're basically a kind of like a little bit of a copycat of Tesla, and yeah, see, there was a lot of hype, a lot of pump and dump going on here. So the stock's been falling pretty much for the last since June, so 4 months. 4 months, yeah. June, July, August, September. So yeah, 4 months. And kind of just waiting for the dust to settle there, but maybe it's already settled. Maybe this is the time to buy Nikola. Who knows? Do your due diligence, guys. Never take my word for the absolute truth. But wow, sorry to blind you guys if you were watching along with me, but here is our acorns. We actually made a little bit under $40, which is 0.59%. If you take a look at the monthly, yeah, we've taken a pretty big L in the monthly, so let this be a lesson to why, sometimes picking your stocks can be beneficial. Look at this, we made 11.5% on Robinhood, while acorns lost 3.25%. So acorns, for those of you that are new, this is you put money in here, it invests it for you, mostly in different mutual funds and kind of like VOO, Vanguard, ETFs, stuff like that. That's kind of what Acorns invests into, whereas Robinhood, you get to kind of pick and choose, and you can snipe certain companies, and that's why I kind of prefer Robinhood a little bit, but still gotta have our balanced portfolio, our balanced investments. So 3 months up 5%, 6 months up almost 10%, and then yearly up 6%. That's about par for the course. When you invest in ETFs, you get about 6% returns no matter what. So, not surprised. No surprises here. No surprises here. But, again, if you're interested in either one of these websites and you want to open an account, please check the description down below and I don't know why my chair is being so squeaky today. Check the links in the description down below for referrals for both Robinhood and Acorns. You will, I think there's a bonus for signing up with either, so definitely go check that out. Alright guys, that's going to do it for this video. I hope you enjoyed. Make sure you leave a like on guys are asleep by now, but if you're not, if you are, just interested all the way to the end and want to support me and my channel, please smash the like button and hit that subscribe button as well. But that's gonna do it. Like, comment, subscribe, and I'll see you guys in the next one. So, if you're watching this during the day, then have a relaxing rest of the day. If you're watching this at night, then have a great